Hi, this is Caroline DeVoy. I'm a CPA firm that I'm a CPA that runs an accounting firm that serves small to medium clients. And we've been working with a couple of designers for the past couple of years that are using Studio Designer. If you've not watched my video on the Studio Designer overview, I would recommend you watch that first. If you're very good at Studio Designer or know most of its underlying workings, then this video is an attempt to show you some tips that I have used to help make it more user-friendly or more valuable to a design firm owner. And I don't think I'm overstating it when I say it's 5 things that can change your life. If you've not seen this crazy slide that I populate with all this crazy stuff, that is in the previous video, the overview video I mentioned before. If you understand how the money moves through Studio Designer to ultimately end up on your income statement, great. You don't need to study this. If you still don't understand how it moves through the process of being stuck on the balance sheet until you invoice the client, then I would go back and look at this video. So I consider Studio Designer to be a bit like a wild tiger. If you don't manage it, you're going to be in trouble. So these are the 5 tips I suggest to tame the tiger, train it, and keep it from eating your face. First thing I want to talk about is client deposits, or when your client prepays you for goods that you are going to purchase. This is a big area for trouble, and I'll tell you why. You easily could be sitting on tens of thousands of dollars of your client's money, and Studio Designer is not good about distinguishing what part of that is yours and what isn't. For instance, the profit on that job is yours, but the sales tax and what you need to purchase the product is not. So I highly recommend when you receive a payment on a client proposal that you break it into 3 components. One component to purchase the product, another component of your expected profit, or in Studio Designer speak, your markup, and the sales tax you've collected. I will note that on the profit, this is going to be your cash if your project is profitable, but I will also say this money is not run off to Bahamas money, because if you have a problem on this project, or any other for that matter, that you have to perhaps kick in some funds to replace wallpaper or tile, etc., it's going to come out of your profit. Once the allocation is made between those 3 categories, then you can use those allocations to pay the appropriate expenses. For instance, your purchases, that purchase allocation would be used to purchase furniture and accessories. Your profit, you would use to pay payroll and other office expenses. If you're really thinking ahead, you could put some of that aside to pay your income tax. Of course, the sales tax is untouchable, and that would be remitted to your state finance department on whatever filing schedule you're on. So you love the idea of that. So how are you going to achieve it? Well, you have to there's some work involved. You're going to have to create a custom report in Studio Designer that will break down your proposal payments into those 3 components. Once you have that report, you can see how much is for the purchase of a product, how much is profit, and how much is sales tax. And you can handle that allocation a couple of different ways. You could set up separate bank accounts and transfer the funds around, though that's not my preferred method, because I'm afraid you just run into extra banking fees. It would be easy not to remember to transfer funds, etc., etc. The easiest method in my mind would be create sub-accounts under your checking account in Studio Designer. And once you record the client deposit payment and apply it accordingly in Studio Designer, you could then make a journal entry to the correct sub-account to show the allocation into purchase price, sales tax, and profit. Conversely, when you pay items, for instance, the credit cards that you've used to purchase furniture, you would use the sub account that is the purchase allocation, purchase dollars allocation. Okay, so the second item that I see designers get in trouble with, or they don't fully embrace, is that studio designer will not move any of the money to the income statement until you've created the client invoice. And I will say, created the client invoice for every single item you purchased. So again, this goes back to that first slide I showed you, where these things sit in accounts called client deposits. These things being the payments from the clients are sitting in client deposits. The purchases you made from the vendor are sitting in vendor deposits, and those do not move off the balance sheet until you've created a client invoice for that item. The third item I think that can really help you is how to handle the purchases you make with a credit card. Here's what happens. You enter a payment in Studio Designer for an item that you're purchasing from a vendor, and you think it's very straightforward. You put in the amount you pay, and that they said that the item will cost, and the date that they're charging your card. Of course, the credit card statement arrives, and what do you find out? The purchase price is maybe not exactly what you expected. There may be a drop ship fee. There may be a change in freight, etc., etc. The second problem that occurs is it does not occur on the date you expected. You may have thought they were going to charge your card on the 15th when they ship the product, but depending on the vendor's workflow, they may charge it 10 days later, or in some cases, they may forget to charge it at all. If you are a heavy buyer, I have seen vendors that will consolidate all your charges on a daily or a weekly basis into one charge. So you are at the mercy of the vendor's workflow as to how those things will appear on your credit card charge. The opposite of that is some vendors will break your payment into multiple charges. You may place an order this morning, the vendor runs a 50% deposit, then tomorrow when they ship the product, they run the second 50%. And you, not realizing that they split it into two, would have entered one payment against that vendor order. So what happens when these things occur? Well, in my experience, everything comes to a screeching halt. The credit card can't be reconciled because the purchase amounts don't exactly match what's on the credit card statement. Or you've got charges on the card that you can't find an item payment for. Or you've got item payments that aren't on the credit card. So everyone freezes. The other items, the other expenses on the credit card don't get entered, or the card never gets reconciled, and the designer can't tell what you owe vendors and what you don't. And finally, everybody gives up and goes home. And credit cards just continue to get further and further behind on the reconciliation. And there's just this mound that is created because you've got a purchase and a credit card charge, and they're not always a one-to-one relationship. So what's my recommendation for that? Well, you can use a clearing account for your vendor payments. And a clearing account is a foreign term if you're not an accountant. But let me tell you basically what it is. It's an account that you intend to zero at the end of each month or on some regular cycle. And you're going to use it for transactions that you need to get in the accounting system, but perhaps there isn't a one-to-one relationship. So in this case, you would code the vendor purchase payments to a clearing account, and on the other side, you would code the credit card charges to that clearing account. And the fact that there isn't a one-to-one relationship is not going to be a big deal because you're going to be able to match them out later. So what I would do is I would create a current liability account. You can call it whatever you want. I call mine vendor payment clearing. And I use it to record the vendor order payments to this account, which creates a credit balance. It's a liability. And you record the credit card charges from the statement to this same account, which creates a debit balance. Then you can use the reconcile feature within Studio Designer to match the debits and the credits and determine how big the difference is, and also if it's material or not. Material being, do we care? Is it 0.5% of all your purchases, or is it 20% of your purchases? And when you do this, everyone can move forward. Your accountant can reconcile your credit cards. Your balance sheet's still in pretty good shape because vendor payment clearing and credit cards payable will offset each other. They won't be overstated. My only caveat is make sure that you have assigned someone the responsibility of reconciling the differences and following up with vendors where there are discrepancies. I promise you, when you have a vendor credit card on file with a vendor, there are times when they under or overcharge you. And this is the only way I know of to track that, is when you are reconciling this vendor payment clearing account. The fourth tip that will change your life is to review the balance sheet, and specifically these 4 accounts, on a monthly basis. And when I say review, I mean compare them to a detailed report that you are able to generate out of Studio Designer. Make sure it matches the balance on the balance sheet, and review that detailed list to see if it makes sense. For instance, if your accounts receivable listing is showing you customers that you finished a project for over a year ago, that receivable may not be accurate, and you may need to update some things in Studio Designer to get it to be accurate. Same with accounts payable, which is what you owe your vendors. Is the detail listing that you got out of Studio Designer, does it match the balance on the balance sheet, and are the payables that are listed valid? Customer deposits, if you'll remember, are monies that you've received from the customer that you have not yet invoiced the customer for, meaning they're prepayments on purchases you're going to make. That there are reports within Studio Designer, or you can create your own, that will show you who you're holding money for of your customers. And again, does it make sense? And vendor deposits are the items that you've ordered from vendors that have not been put on a client invoice yet. Don't forget, nothing moves out of these deposit accounts and onto your income statement until the item is placed on a client invoice. So you can have expenses sitting in vendor deposits that will never move to the income statement until you invoice that item. By reviewing these 4 accounts each month, you will start to get a feel for where your workflow's falling apart. It'll keep you from overstating your assets or liabilities, and it's just good practice for making sure that your income statement is really reflecting what's happening. Don't panic. Studio Designer can be a handful. It can be difficult to understand. Sometimes there are things that I think take longer than they should, or are more detailed than is necessary. But if you keep it under control, don't let that tiger, don't give it an inch on its leash. Keep it tight. Make sure you're staying on top of the workflow. Don't panic about getting good financials out of Studio Designer. Just be disciplined. First, I'd make sure that your workflow is designed to give you a correct income statement. And this includes making sure that you have a project closeout procedure to make sure that the receivables are cleared, that the payables are cleared, and that all items that you've ever purchased for that customer are on an invoice, so the costs are correctly moved to the income statement. Secondly, review your balance sheet regularly, at least monthly, to ensure that transactions aren't going there to die. If you don't generate client invoices for every single item, they are still sitting on your balance sheet. And my last bit of advice is don't get tied up in the pennies. It's easy to get overwhelmed because of the volume of transactions that can be going through Studio Designer, and sometimes the inability to batch things. You're really entering a lot of individual details, can make you get overwhelmed by the number of transactions you might have to deal with to fix some pennies. When it comes down to the pennies, throw them out. What you want to focus on is where the big dollars are not being recorded properly. Particularly, are your vendors charging you items that are not getting passed on to the customer? Are they charging you items that they shouldn't charge you for, et cetera, et cetera? So don't let the little itty bitty details bog you down. Move on from those. Do whatever you can to clean those up as efficiently as possible, and then focus on the big areas. If you would like copies of the slides or have other videos you'd like to see about Studio Designer, just email me at info@bizhippo.com. My name is Caroline DeVoy, and thanks for watching.